Hi everybody, this is Gary Dama Sentiment Timing, and this is our free technical video report for Tuesday, April 16th, 2019. So let's get started. I hope you guys are having a good trading week. So far, the past couple of days have been kind of boring. We haven't really done anything, but our predictive analytics model is definitely throwing out some red flags, and we are approaching some interesting time periods now. Now, something I went over in the morning notes that I believe I may have shared with you guys, I'm not sure, but one of my leading indicators that I follow is throwing up a really big red flag right now, and I'll go over that in tonight's report and just let you know what I see playing out. So, as I had mentioned, the predictive analytics model, we are neutral bullish right now. This changed because this has been bullish the entire time since the December 2018, and that's because we're approaching some time periods where Woody is expecting the kill zone to hit, and that's most likely when this uptrend is going to end abruptly, and then we have a momentous move to the downside. So short term, we are bearish. Intermediate term, neutral to bullish. This intermediate term bullish has been really holding everything up right now, and long term bearish, which I'll go over to it. So euphoria short term, we are here. On intermediate term, we are around here. So we are at this cusp right now where everybody is getting excited about the market. They're mesmerized by the fact that it's not going down, but they're missing what a lot of what the internals are talking about the market, where the first 15 minutes of trading has marked a high for almost every big move that we've had, and it's really starting to take its toll on some of the internals. And once the overseas money kind of dries up a little bit or is done piling into our market to get out of the euro, it's going to be the market is going to roll over, and I'm not sure there's going to be a bid in place, because it's really been these overnight traders that have been taking the market where it is, and the second that the market opens after 15 minutes, there's nothing but selling. So let's go over some things. Let's take a look at the sentiment part here, and just to go back for people that haven't seen this, our predictive analytics model is based off of time, sentiment, and technicals. So intermediate term time, we still have a little bit time before the kill zone hits, but short term, we're in a time period where we could be seeing a topping period. Sentiment, I will show you that we have extreme bullish sentiment readings, so everybody is looking up, and technicals are giving us reasons to look lower. So here you can see we just everybody is getting extremely bullish on this market up here, just as everybody was extremely bearish on the market when we were at the lows. Now, this was from today's report that we put out, and it's profile allowed for strength into this time frame. We are seeing investors become hypnotized by the friendly market. The pain trade has been higher, and the halo, that's the golden halo that Woody talks about in his essay, phase may continue. Meanwhile, the dominant timing facto has been interim trend, which I just explained, which is still up as expected. But this may also infer that once the trend is reversed, it may also be monumentous to the downside. Why are they buying stocks up here? Why did they buy bonds at the highs? Explore the error. This is what he does with his behavioral, in his book that he wrote, Behavioral Trading, and why so many large institutions follow him, because he looks at the market a lot different than everybody else out there. And there is a notable kill zone that is going to be approaching, and that's what we're talking about, where everybody is getting bullish at the exact wrong times. And it doesn't mean that the market can't head higher. It just means that everybody's going to be trapped up there when the market does roll over, and it's going to roll over just like, and nobody thought that the market was going to move higher when we were down at these lows. We were one of the few, if not the first, that said to be buying at the 23.56 level. And our anticipation was that this was going to continue into the springtime, which we are here now. Now, the thing is that I didn't expect it to do it in the fashion that it did. I thought it was going to be a little more choppier, but it still did what the overall perspective was that we thought was going to play out. So let's take a look at some of the leading indicator chart that I'm talking about here. So I'm not going to give you the name of it. It's a futures contract, but this is just the charts. I have dates on here, and then they're following here. So this is on 2/25. So it's February 25th. You can see this futures topped here, came down, and then on March 3rd made a lower high, so it diverged. Here is the S&P. Here's February 25th, came down, made a higher high on the 3rd, and then from there we collapsed. So you can see that divergence in this particular futures contract that led to this drop right here. Now we're starting to see the same thing happen up here, where you can see the S&P has been going kind of in this uptrend line, and if I kind of pull this out, you can see that this is just kind of going flat. So we're starting to see a little bit of a divergence in that, but not much. Really the main thing I wanted to show you was how this has led these big moves to the downside. And if you look here, this was on March 19th, and then this was March 21st. Here's March 19th to 21st. The S&P made a higher high and then collapsed down. So this is what I'm anticipating to see right here, where it's kind of just leveling off, but it's not really diverging. It is kind of a little bit, but not really what we've seen like this. So I'm anticipating that what's going to happen is we're going to get a drop and then a bounce. So we'll get a drop and then a bounce, but our leading indicator futures contract is not going to come close to the high, and then from there we see a larger drop. So that's really what I'm going to be watching in the coming days, because it is going to give us a tell as far as when to expect the 150, 170 point drop that we think is going to be coming into play. Now this is the same charts, but this is on a daily chart, and this is what I'm talking about, where this has led the way as far as for these bigger moves to the downside. So here's 9/21. Our leading indicator chart topped, came down on 10/3. It was already on its way down. Take a look at what took place. Here's 10/3 on the S&P. So this is 2018, making new all-time highs, and then from there it ended up following everything down, and we know what happened from there. So this is another thing that I'm really watching on this, is if you take a look at where we are with this from these lows to these highs, we're just barely above the 78% retracement level on our leading indicator. So it's diverging from where the S&P is. That's borderline close to these all-time highs. So these are the little things that we look at, and what gives us this little advantage over most other newsletters out there, because nobody has sentiment data that they're able to use like Woody has, because he's one of the few in the entire world that has it. But on top of that, he has these turn dates, and these dates have been in place, like I said, at these lows here in December. Members knew not to expect a high until after March, April. So here we are right now, and this is exactly what happened. So it's nobody else has this type of data to be able to put into their trading newsletters, because nobody they just don't have this type of information. So let's just go over our charts real quick, and I'll give you a quick rundown on what I see playing out. So here is the hourly chart on the S&P. If we head higher, keep an eye on that 29.19, 29.23. I've been actually, from when my first long position was down at 23.56. My target has always been up at this 29.22. Again, I did not think it was coming in this fashion, but notice that we have 5 waves up right here. Typically what that is looking for is anywhere from a 50 to 62 to 78% retracement. retracement. This pattern is looking for a move to come someplace down into the 2704. I believe it's going to be that, and then up. And then remember what I was showing you with this daily chart here, where this will make it, you know, we're not going to get that new high on it, and from there that's going to set up the larger move to the downside. So again, right now this pattern's looking for a move down to this 2704. We have bearish divergences. 15-minute chart, really, I don't know why these are all on here. Okay, 15-minute chart. So the bears need to get it through to 28.93. Do that, we're going to see reaction trade down to the 28.71. Bull bear line is 28.60. Until the bears get it through there, the bulls are going to keep fighting. Here's just that bearish wedge target. You can see it's heading lower, so the longer they hang out up here, if this pattern plays out, the lower this target goes. So keep an eye on it. But like I said, we have some really, really interesting times that are coming up right now. We have important turn dates that are coming. We know that everybody is just piled in on the long side, but it doesn't mean this market has to go down right now. Our leading indicator is throwing up some warning signs, and you know, just don't believe everything that everybody's saying. This market's not as healthy as everybody thinks. So until my next report, have a great night, and I'll talk to you guys next time.